Hey there, self-employed hustlers and business owners. I'm Mauricio, a mortgage broker who works with people just like you, and I have news flash you're going to love. You do not have to show your tax returns to buy a home. Yep, you heard that right. If you've been writing everything off as you should, and your tax returns make it look like you're barely surviving, don't worry. The truth is, there's a loan program designated for people just like you. And in this video, I'm going to break it down to show you exactly how you can qualify, what docs you need, and where to go to make it happen. Let's jump right in. So why traditional loans don't work for self-employed buyers? Well, most of the business owners hit a wall when applying for traditional mortgages. And the reason is pretty simple. Traditional loans want your tax returns to show a high net income. But when you're smart with your business, you deduct everything so you can lower your taxable income. That's great for accountants, but terrible for your loan application. Banks and big name lenders often don't know how to handle non-traditional income. If you walk into a retail bank and say, I own my own business, they'll immediately ask for 2 years of tax returns, and then when they see that you only made $30,000 last year after write-offs, boom, you're denied. That's where self-employed specific loans programs come in. These programs are non-QM, non-qualified mortgage products, which are made for people with complex finances, business income, or multiple income streams. And best of all, they don't rely on any tax returns at all. So if you've been told you don't qualify, it's not because of you. It's because the lender didn't know your options. So let me show you what those options are. So what can you use instead of tax returns? The best part of self-employed mortgage options is that you can replace your tax returns with other documents that better reflect your real income. Here are the top options lenders may accept. 12 to 24 months of business bank statements. Lenders look at your average monthly deposits and use that to estimate your income. They'll calculate your revenue, apply a fixed expense ratio, usually anywhere from 30 to 50%, and determine how much you can qualify for. Another option is personal bank statements. If your business income is mostly deposited into your personal account, some lenders allow personal statements with clear documentation of your income. Another popular one is CPA letter or a P&L statement. Some lenders may accept a profit and loss statement prepared by your CPA, sometimes with a letter verifying your business income and the operations. Asset depletion is a big one. If you got significant savings or investment assets, you might qualify by using those assets to show that you can cover the mortgage without income at all. So if your tax returns make you look broke on paper, don't worry. These programs are made for entrepreneurs who know how to keep more money of what they earn. These non-tax return mortgage programs are especially designed for people who own their own businesses or are independent contractors. They earn strong income, but they write a lot of expenses off to just reduce that tax liability. A lot of them have solid bank deposits, but low net income on paper. They need flexibility that traditional lenders cannot offer. These people include real estate agents, consultants, barbers, gig workers, truck drivers, Airbnb hosts, influencers, and even startup founders. If you file a 1099, have an LLC or an S Corp, or get paid irregularly, you likely qualify for this program. And here's the kicker. You don't have to wait years. Many of these loan programs only require 1 to 2 years of being in business. You also don't need perfect credit or massive down payment. Some lenders will work with scores starting at 620 or 640 and allow as little as 10 to 15% down, depending on the loan and type of the property. These type of loans are more flexible because they're designated for the new economy, for people who don't get a W-2, but they still bring in consistent income and want to build wealth through homeownership. Now, here's the part that no one tells you. Not all lenders offer these programs, and most retail banks and big name lenders don't even know about them. This is where working with a mortgage broker makes all the difference. Mortgage brokers, like me, aren't tied to just one lender. We work with dozens of lenders and can match you with the right program based on your income, your business, and your goals. So when someone says, sorry, you don't qualify, they're really saying, I don't have the right product for you. We specialize in working with self-employed buyers, reviewing their unique financials, and finding creative ways to get them approved. We know the lenders who accept bank statements. We know who offers asset depletion. And we know how to package your loan so it gets approved the first time. You don't need to change how you run your business to qualify for a mortgage. You just need someone who knows how to work with business owners. If you're self-employed and want to buy a home this year, here's what to do next. Stop trying to fix your tax returns. You don't need to pay more in taxes just to qualify. Gather your last 12 to 24 months of bank statements, personal or business, and will help you determine which is best. Talk to a mortgage broker who understands self-employed loans, because that's what we do. We help business owners become homeowners without compromising their business. Whether you want to buy your first home, invest in a rental property, or refinance what you already have, we can walk you through it all. You understand what documents are needed, what your monthly payment may look like, and how to get approved without the stress. And if you still have questions, book a call with us. You don't have to choose between growing your business and buying a home. With the right team and loan, you can do both. Thank you so much for watching. If you found this video helpful, hit that like button, subscribe for more content on mortgage strategies for self-employed professionals, and share this with anyone who you know might benefit from this information. And remember, buying a home when you're self-employed isn't impossible. You just need to know the new way to do it.